Okay, hi everyone. A very good afternoon. You're watching the newsroom on ET now. I'm Mubina Kapasi. Recovery being witnessed in the equity markets from the low point that we saw in the early hour of trade. We're now, in fact, hovering near the day's high of 11,420. 0.5% of gains being clocked in for the Nifty, and the Sensex gaining 0.65%. Let's tell you which are the big movers and shakers today in trade. Starting off with and Info Edge. Yes, we still have Q1 numbers trickling in. And how exactly has Info Edge done? What is then the street making of it? Well, you know, we had also the management of Info Edge speaking to us on ET now. But yeah, numbers, well, not that bad, really. You know, we did have the revenues that came in lower by 10%. And deferred sale revenues, meantime, was down by 25%. But profit after tax managed to gain roughly about 25%. We also had a brokerage note over here. We had Axis Capital maintaining an ad as they believe that the company has managed to post quite a strong beat on the margins. And there is recovery from Q3 levels as well. According to them, startups could yield huge returns. And there's huge return potential from Info Edge's new ventures as well. Stock price of Info Edge is doing pretty good in trade. Okay, more stocks in news then, and of course, how can we not talk about Bharat Dynamics? It's a rapid and a massive decline being witnessed in the counter. Stock down almost about 13% as the government is planning an OFS, or an offer for sale, for 1.83 crores. This will be on the 8th and 9th of September. So sharp fall being witnessed over there. Ashoka Builcon as well is in focus. This is on the back of the company announcing that they have actually won a couple of orders, and you are seeing a massive momentum being witnessed in the counter. This is, of course, from NHAI. And yeah, that stock is in focus on account of that. They've emerged as the lowest bidder for projects of roughly 1,400 crore rupees in the state of Bihar. And then we also do have aviation stocks that are in focus. The reason behind this one is that, you know, we had news that there has been an increase in passenger traffic in the month gone by. There's recovery being witnessed in the month of August. In fact, a sequential growth of almost about 25 lakhs. 25%, pardon me, to 26 lakh passengers. And you know, Indigo has had a great month. It's climbed steadily and it's stayed at that levels above 1,200 rupees. And you know, that's the reason why you know, we have this stock, Interglobe Aviation, on our radar. Well, VC Sehgal of Motherson Sumi has no doubt that demand for cars will see a surge as the pandemic dies down. So here's the big corporate voice of today, Nikunj Dalmia, in conversation with VC Sehgal.
That you know, the definition of automotive or cars or two-wheelers or things like that definitely changed pre-COVID and after, like we are going through with COVID at the moment. Car is now the best example of PPE, you know, private personal environment controlled thing. Is the car is a very, very good situation. A lot of the things have changed. People are wanting to actually go to work or go out. They want to be safe. You can see the resistance which is there in aeroplanes and in trains and even metro, which has just started off today. So I think a car or a bike or a two-wheeler is probably some kind of guarantee to the family that the people are safe. So I think the world has changed on that. We are operating almost all our plants globally at the moment. So there's only one plant which is not working at the moment, but that's also because of the location where they are in Europe. So other than that, great to see that yes, the demand is back. People are buying. People are arguing whether it's it's a pent-up demand or it's a new demand. And I'm saying a demand is demand, and we don't second guess our customers. Our customers give us the thing that they want to buy, and definitely we are selling.
The data which is coming from China, Mr. Sehgal, seems to be pointing to a 20-25% uptick in various categories. Do you think it's a matter of time? Other geographies also will come back in the same space with the same pace, because China was, China as a country got hit first with COVID, and it has come out of COVID the first. So obviously there would be a lead. That's obviously a lead indicator. I think one can take heart from the Chinese data, and can be expanded and extrapolated for rest of the world as well?
Absolutely. We have seen that, in fact, our last quarter results in the last 5-year plan got impacted because China went into trouble somewhere around February already, and by March end, they were coming out of it while the whole world was going into it. So we've always had the benefit of hindsight because we could see all the things playing out in China, and then they played out all over the other world. It also allowed us to actually to take advantage of the knowledge. You'll be surprised, in February, second week, we actually air freighted masks to China because Chinese government had said that if there is no mask, you can't come into the factory.
It with Motown, then Tata Motors is already producing much beyond it produced in the pre-COVID levels, says Shailesh Chandra, the president of passenger vehicles. In his first interview after taking over the post during the lockdown, Shailesh said that the company is not worried about the current market situation for finding a strategic partner, but says it's an important step for the future capex requirements. Listen in.
The demand actually started from more emerging markets, where the lockdown situation was not as, intense and grave as in the urban centers, right? And that's when you saw that demand actually started picking up much faster than what we were anticipating. And in May, we had an offtake for the industry at around 36,000, which went up to 115,000. And in June, and then in July, it nearly touched 2 lakh. And last month, it was about 2.35 lakhs. So you have been seeing this growing very steeply every month. And so has been the retails also. On the back of the retails have been slightly more as compared to what we have seen in the wholesale. Now, there is definitely a pent-up effect what one sees, especially in the initial months. There was, heavy part which was pent-up demand. But there have been certain tailwinds, I would say, to the normal trends, which is a shift towards personal mobility, which is supporting this also, apart from the pent-up demand that we had. And also, one is seeing this more in the urban centers because this is where this phenomena is. So a trend which started, more biased towards rural demand has been now stabilizing at the right mix of rural-urban, if not more towards urban, I would say, last month, because the phenomena of this shift towards personal mobility is more an urban affair and less of a rural affair. And also, if you see the trend of SUVs, which are more urban SUVs gaining traction, which is now 30% of the total mix from 26% or 27% in the earlier times, clearly shows that in August there might have been certain bias towards urban. But as you possibly go forward, as the festive season comes, you'll see strong growth in both rural and urban. But I would say definitely till Diwali, we see this trend continuing, and industry seeing growth on a back of a lower base, I would say, last year. Beyond that, we'll have to really see whether the pent-up, is it a pent-up demand which is, taking the demand significantly more than what we were witnessing last year. This effect will be seen more beyond Diwali. It is speculative at this stage, I would say.
Well, on ET now, we have a segment called What's the Story, where we identify stocks where the story is a little lesser known, but there seems to be some action, or where we believe there could be some action going forward. So today's stock of the day is Aegis Logistics. Let's go across to Varun Hirimat.
Okay, Aegis Logistics is a nearly $1 billion company, 7,000 crore market cap. 300 crore revenue in 2010 has gone to around nearly 7,000 crore in FY20. That's a 38% sales CAGR over 10 years, very impressive. They operate terminals for LPG infrastructure and gas infrastructure, and these are all port-based. So whether you look at Mumbai, Mangalore, Pipavav, Kandla, Haldia, Aegis has a presence at all these locations. Now they're very strategic. They all have storage terminals, they have rail connectivity, they have pipelines to customers. Let's remember, LPG is not really produced in India. It's a majority imported fuel. And as of now, even PSUs aren't really foraying into LPG too aggressively, which is what has built such a strong pipeline for Aegis's business, as the imports are only going up year on year. Now, Aegis is a very interesting company. He's currently in the process of nearly 3xing his capacity. Now, usually when you hear this, investors get concerned because they raise debt to fund this. What will be encouraging for investors here is that Aegis has not only not increased his leverage, he has actually deleveraged. So he's paid down debt while doing capex. And that just shows you how much cash this business generates. Right now, if you look at the EBITDA, it looks a bit lower, but that's because he's currently expensing employee stock options that he's giving to certain executives on the P&L of the company. So it's making the EBITDA look lower. This is a one-time expense. The second it goes away, your EBITDA should see a significant boost. With that being said, given that there is a lot more capacity available and management feels fairly confident of increased volumes despite the macroeconomic conditions we're hearing, LPG is a trending fuel in India, so the outlook on this one looks quite robust and definitely one to keep on your radar.
Okay, Varun, thanks a lot for that. We will do one thing. We'll take a very short break right here on the show. But when we return, the IPO market is hotting up. We'll be talking about the two stocks, or rather two companies that will be listing on the bourses very soon. Okay, welcome back. You're watching the newsroom on ET Now. It's a double IPO week. On Monday, Happiest Tech IPO kicked off and is set to close tomorrow. Tomorrow is also when Root Mobile IPO goes on floor. We at ET Now brought you an exclusive conversation with both managements. Let's take a look at how both these companies are preparing and expecting from this IPO.
Essentially, you've got to go back to my first response to you. We're in 3 business lines. Each one of them is growing. Each one of them has a need for specific requirements in a customer. So let's take product engineering. Here, the customer is either the CTO of the company or the head of engineering. And you know, we're in a world where everybody is creating platforms and running businesses of those platforms. Software is being delivered as a service. So that segment of the business focuses on this. In digital business solutions, we have many more customized offerings. We have specialized relationships like we have with a company like Cloud Lending. We've got a relationship with a company like PIMCO, and we deliver solutions around all of those. And the third one is infra and security, where in infra we do absolutely no legacy work. So it's all the cloud and hybrid clouds and other areas like that. And security is an area which is huge. And the security needs are going enormously day by day because you see the number of attacks. You see the need for increased security due to everybody moving work from home. So these are some of the segments which are in each one of the business lines, I would say that there's growth. So, you know, that is exactly the first point I made. Given the fact that we are 97% digital, we've said the companies we really compare ourselves with are EPAM, Endeavor, and Globant. All 3 are listed in different geos. Their growth rates are comparable to our growth rates, but they've done a lot more acquisitions, but they're also larger. They've done 4, 9, whatever, and our growth up till now has been almost completely organic. So they're comparable in terms of profitability and in terms of current growth rates, as measured by EBITDA and growth and so on, and also in that offshore ratio, by the way. We are actually right there in the top 1 or 2 on all these parameters as compared to those 3. In terms of the others, you can see that we're obviously well ahead on growth. We are behind the larger players on profitability. We are getting ahead of all the mid-sized players, but I don't want to make comparative statements, only to the extent that those numbers are already available as published data.
So I think because of the digital acceleration, you know, like our Q1 revenue is over 315 crore. And that was the highest as compared to the previous quarter. So we as a company always believe that our platform will play a very big role in coming days in terms of giving a better services to the end user and enterprises. And at the same time, we believe that this is going to be the next big thing in all across the globe. And we believe that the way the revenue is growing, the way we are adding more customer in our portfolio, I think we were very sure about it, and that's why we thought this is the right time. And if it can list during the time of pandemic, then you definitely have something different than others.